Namaste everyone. In today's session, we are going to understand the reverse charge mechanism, commonly known as RCM, specifically applicable to metal scrap under UAE VAT. The Cabinet Amendment, Cabinet Decision 153 of 2025, effective from 14th Jan 2026, is very important for business dealing in scrap trading, recycling, and manufacturing. Let us understand the background, compliance requirement, and practical impact in a simple and structured manner. Next, we move on to what is the background and its application. The reverse charge mechanism applies when a supplier makes a supply of metal scrap to a VAT-registered recipient. However, there is an important condition. The recipient must intend to either resell the scrap or use it in processing. So the objective behind introducing RCM in the metal scrap sector is to improve VAT compliance and reduce fraud risk. Since scrap transactions are often high value and vulnerable to tax leakages, the responsibility of VAT payment has been shifted from the supplier to recipient. Next, we move on to key provisions and definition. Metal scrap includes ferrous and non-ferrous waste that has commercial value and can be reused after processing. Processing includes recycling, repairing, or transforming scrap into usable material. The core rule of reverse charge mechanism is simple. The supplier does not charge VAT. The recipient calculates VAT and reports. This ensures transparency and strengthens regulatory control over the scrap industry. Next, we move on to the supplier's responsibility under RCM. Under the reverse charge mechanism, the supplier does not charge VAT on the invoice. The supplier also does not report output VAT in the VAT return for such suppliers. Instead, the supplier must verify the recipient's VAT registration, obtain a return declaration confirming that scrap will be resold or processed, clearly mention VAT under reverse charge mechanism on the invoice. Once these conditions are fulfilled, the supplier responsibility ends. Next, we move on to the recipient's responsibility and compliance. The major compliance burden lies with the recipient. See, the recipient must provide return declaration before the supply, self-account for VAT on the value of scrap purchased, report output VAT in the VAT return, claim input VAT if eligible. If the scrap is used for taxable supplies, the output VAT and the input VAT will generally offset each other, resulting in a net zero cash flow impact. However, important to note, failure to comply with documentation requirements may invalidate the RCM benefit. Next, let us take a case example and business impact. Let us understand with a simple example. See, supplier ABC Scrap LLC is a VAT registered. Buyer XYZ Manufacturing, Free Zone Company, VAT registered. So value of scrap in AED is 1 lakh. Supplier issues invoice without VAT and mentions reverse charge mechanism. So now what happens? The buyer calculates 5% output on VAT, which is AED 5,000. So once he pays, he gets the eligible input VAT AED 5,000. which can be set off against the payable. So on the output liability, there is no cash outflow and compliance reporting is very mandatory here. The final thing, effective implementation of this mechanism will enhance VAT compliance, reduce fraud risk, and ensure proper documentation in the metal scrap sector. So businesses must update invoicing practices and internal compliance system accordingly. Thank you for watching.